Hello, I'm David Jones, and I thought let's take a look at natural gas. The price has been in recovery for a lot of this year. We've seen a big level broken in recent months. So I thought, let's do an update. Is this the start, or are we already seeing the start of a much bigger recovery in natural gas? We know that if we wound the clock back to last summer, it was up around $10, currently trading just above $3. So I thought, I know it's always a popular market, it's an interesting market to look at, it's a pretty volatile market in the best of times. So I thought, let's take a look at natural gas in a bit more detail and see where the opportunity might be. So as usual in this video, I'll talk a bit about the recent news about natural gas. It's quite interesting, the slant on the news. I wonder if the commentary is being too bearish, too negative, which would support, for me anyway, a contrarian argument. Perhaps we'll see the market go higher. And then we'll jump onto the charts. We'll take a look at the charts in a bit more detail and see where the opportunities are and see whether there's a trade to do here. Before I get into that, if you watched any of the videos I do, you know that I do a few other things. I've got a trading course that I've run for a few years now. You can see details on the website, davidjonestrading.co.uk. Find out all about that. There's a WhatsApp group that I've run for all of this year. It used to be just for those who've done the trading course. I've opened it out to anybody who wants to join. So every day I talk about the markets I'm watching, talk about the trades I'm running, and there's a Q&A session throughout the day. You can join the WhatsApp group. If you use the code YouTube, you get a 20% discount off the first month. Again, if you go to the website, all the details are there. The final thing I want to talk about before we get into natural gas, I ran a couple of invitation-only webinars over the last month or so. The first one was, if you could wave a magic wand for your trading, what would you change? And I got people to email in their points. What was really interesting was how many of these points, and we may think that trading is all about strategy, what moving average do I use, how do I use trend lines, but more than half of the issues raised were actually psychological. So people with our own mentality when it comes to trading. So that was a really interesting webinar. And the second webinar I ran last week was, if 70% plus of traders lose, as of course we know they do, what do I need to do differently? So I ran that last week and we looked at some things in there as well. So if you'd like to see any of these webinars, because they're recorded, drop me an email. My email address is dj@davidjonestrading.co.uk, and I'll send you the link to the webinar. So the information, the details for all of this is down here in the description to the video. And I'm doing these webinars as part of the partnership I launched in the last couple of weeks with a broker. And clients who join the broker through me will get these invitation-only webinars every month, and a whole load of other stuff. But for now, if you'd like to find out and watch these two recorded videos, drop me an email. There's a link to the broker in the description as well. But if you send me an email, I'll send you a link out to those videos. Right, let's get into it. Let's take a look at natural gas. So we have seen the price in recovery since April. And just last month in October, we saw the price hit an 8-month high. So I think what's quite interesting, you know, obviously I do a bit of reading before I put these videos together, even though I'm primarily trends and a chart-based trader. There's been quite some negative commentary. There's lots of, not overly negative, but fairly downbeat news about the natural gas price due to the record production levels that we're at, and also the mild weather that's being experienced. So that clearly has an impact on, we've got lots of supply, record production, and mild weather has an impact on demand. For example, talk about the production side of things. Output in the USA hit a new daily high in November for the day, surpassing the previous daily high that was in October. So production levels are going pretty much full pelt, and there's commentary out there saying, well, this is going to keep a lid on the price. The mild weather isn't going to help demand. And when news starts to come together and all suggest, well, actually, this doesn't look like it's going up, that's when I start to think perhaps there's a contrarian argument here. Reuters just this week has said that rising demand was being seen in Asia and Europe, although, again, slightly negative one here, European inventories are 99.6% full, according to Reuters. This milder weather is expected to last until the last week in November, and that seems perhaps a bit of a short-term outlook. Winter 2023 to 2024 is not expected to be colder than normal, so we're not expecting a freakishly cold winter. So again, that's a suggestion that it's going to keep a lid on demand for natural gas. But despite all of this bearish chit chat and commentary, I want to be a buyer. And what we'll do now, we'll jump on the charts, take a look at what the trade might be and the levels to watch. Right, let's take a look at natural gas. Let's just remind ourselves where we've been. So off the August highs, 2022, of around about $10, down to the lows, April this year, below 2. So traded as low, it's about 190 in April. And what's interesting to me is what's happened since. So let's just step things forward. So for a while, we had this real barrier around about 3, near enough. We saw a rally up in March, and then the price sold off again to new lows. We saw a rally up again into August, again stops at 3. But the big change was what happened in October. We had this market move out to 8-month highs in October. So we had the breakout, we had the trend off the lows in May, April, May time. And then it broke out. And so far, you can see, so far what's going on, this trend line's holding. So that for me is the interesting thing in natural gas, that we are trending higher. So for me, I'm very much buy the dip mode in natural gas. Obviously my main reason is driven by what's going on in the market, and we are seeing this market trending higher. But because there's quite bearish news, so nobody's saying really, natural gas, we're going to see a massive recovery. And I think a lot of the time the news is wrong. If we're using the news to try and predict markets, it can be quite interesting to go against the majority view that the news is talking about. And we've seen mildly negative chat about natural gas. So for me, I do think the trend is still up. If we're looking at targets in the short term, my first target from where we're trading now, we're trading at 302 at the moment at the time of recording on Wednesday of this week. My first target would be for a run back up to these old October highs. So coming in around about, where are they? 333, that sort of level, continuing the trend. And of course, if we're going to see this trend continue, then, the expectation for me is we'll see this market move to new highs for the trend. So let's just step things out and take a look at possible objectives. It's difficult with natural gas because we have seen, if you followed this market at all over the last few years, it's a market that can be crazy now and again, for want of a better word. And we have seen some extreme moves. If we look at the move from December 22, and it was trading around 670, it went down to 250 in pretty much a straight line. There wasn't much in the way of rallies that failed on the way down. It was just selling really steadily off. So I think when it comes to targets, all right, an ambitious target would be for a run back up to those December highs, up around 685. That's more than double where natural gas is trading now. So that's perhaps too much of an ambitious target for me in the medium term. But if we have a look at some of the swings we're seeing at the moment, swings of sort of 60 cents or so, the big swings aren't unnatural. So for me, perhaps $4 would be a more medium term target for the price of natural gas, which is still a 30% move from where we're trading now. So I think it's a really interesting market to watch. If we take a look at something like the RSI, the relative strength index down here, we've got a 10-day RSI. I don't think we're getting a lot from that at the moment. Went very overbought in October, and the market did carry on up for a bit. And since then, we haven't really seen it hit an extreme. If we go back over the last 4 or 5 months, we can see various overbought signals along the way. The last oversold signal for natural gas, we've got to go back to Feb 2023 down here, so earlier this year. So perhaps a slightly tighter RSI, a shorter RSI would be the right thing here. But anyway, so for me at the moment, the trend is up. I want to be a buyer of the dips. The first thing I think about, which you'll see if you have a look at those 2 webinars, if you send me the email to dj@davidjonestrading.co.uk, I'll send you the links to those 2 webinars. And in the second one, about why people lose and what do we have to do to avoid losing, I explain that all of my energy when I'm thinking about putting a trade on is where does the stop go. So this is, for the moment, all I'd be concerned about with the natural gas trade. Where am I going to put my stop? An aggressive stop for me, it would be too aggressive for me, would be the other side of 280. So we had the low hit just about a week ago, just under a week ago, at 280 on natural gas. We got the trend line coming in at around about, where is it at the moment? About 275, something like that. That trend line has held all the way up. So perhaps the other side of 275 is one idea for a fairly tight stop. It'd only be about 30 points away from where the market's trading at the moment. So like I say, perhaps a bit too tight for me. If I was trying to catch the bigger recovery in natural gas, if I thought, well, actually, the rest of this year and into next year, we could see a much bigger swing, then I want to have a wider stop. And, probably one of the regions I would look at, these old lows that held all the way from June through to September before we really saw it springboard higher. So that means my stop needs to be the other side of 240, which is a 60-cent plus stop from where we are now. But if I do think there's at least 100 points in this trade, perhaps even more, then a 60-point stop could work. So those are the sort of areas I would look at natural gas. And in the short term, even if it broke the trend line and pulled back into this previous sideways range, I'd still be happy to be a buyer. I'd still be giving the market a chance to move higher. So for me at the moment, absolutely, my bias for natural gas is to expect further gains. I think it's going to be really interesting how the rest of this year pans out as we get deeper into winter. But this trend that's been in place since April, May of this year is still going for me, and I am quite happy to continue to buy the dips and try and profit from this market moving higher. That's it for the update in natural gas. It'd be really interesting to see if this trend continues to chug along that's been going since April. I think it will at the moment, so it's fairly clear which way my bias is. Don't forget, if you want to join the WhatsApp group, go to the website, davidjonestrading.co.uk. If you'd like to see those 2 recorded webinars that were invitation only, just over an hour long, both of those webinars, the recordings, drop me an email, dj@davidjonestrading.co.uk. All the information is in the description to this video. As usual, I'll be here on Friday, do the usual Friday live stream. But until then, we'll leave things there for natural gas. So in the meantime, good luck with your trading.